Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, November the 21st. The year is 2022. Let's talk trading. Trading without a system is erratic. Part 4 with Walmal. These videos are for educational purposes only. Your results may differ from mine and different for Walmal's. Walmal, you took a note last week, something that we needed to tell the traders out there about.
Yeah, I wrote down lot size. Don't be erratic. And what I mean by that is that, sometimes we go as traders and we go and when we put a trade on, and we set, we go and obviously tell the broker how much we're willing to go and bet on a trade. And we put that number in there, whether it be, a half a lot, one mini lot, a micro lot, whatever it may be. And sometimes it seems like with a lot of traders, what we do is we just randomly put a number in there. No rhyme or reason. And that can become very, very erratic in what we're doing. And what I think that leads to is making decisions based on emotion. Oh, this is a trade that's gonna go. It's definitely gonna go. And because I know it's definitely going to go, I'm going to go and bet the farm on it, and next thing you know, you've taken, you got a $3,000 account and you've put a 10 lot trade on, because you got that 500 to 1 or 1,000 to 1 leverage that you can play with. And then all of a sudden it goes 3 pips against you, and now you're down $300, and so now you're down almost 10% of your account, and we can't be making decisions like that, guys. It's just, no, we have to go and, make a decision on what we put in for our lot size based on what we can go and rationally go and risk. And we need to go, and I don't care what your method is, but we got to have a method that's, I want to go and say non-erratic, so circular reasoning here, but maybe a better way of saying it, have a methodology that allows us to be consistent in what we do. And that's the thing that's important, is we need to be consistent, because if we don't have consistency, then we're going to have a problem. The reality is the market is going to do what the market's going to do. Some people would even relate the market as being nothing more than, if you remember back from high school, science class, being nothing more than a Brownian motion machine. In other words, it's just something that just moves, and it may move in a particular direction, but it moves in that particular direction in a random direction or a random way. So we have something that's already random that's out there. And that, I think, Kiara, you pointed out last week, that when you go and place your bet, if you win, that was luck. If you lost your bet, well, that was luck too. And that's part of the randomness that's happening out there. Well, if we're going to go and try to make money here, we can't take randomness and then go in with more random variables. What we need to do is take that chaos and try to conform that chaos within borders. And by doing that, I think at least we have the chance that we will actually be able to come out on top. And over the long haul, if you've got a good set of borders, you certainly can make money on it, but you can't just go and just willy-nilly changing things and making random decisions, based on all types of, emotional, stuff. And it seems like that every time we talk about these things, sir, it seems like we're always getting back to, that emotion component, that brain management component, because I think that's the biggest thing that causes traders to lose.
Yeah, I would tend to agree. I was listening to what's that guy, Brett Steenberger, one of his videos, and he was saying that once again, going back to the three-legged stool, it's not just all psychology, it's not just all system. You got to have all 3 legs of that stool. And because if one of those legs is too short, that stool's going to fall over.
Right. It's going to be, or at least at the minimum, it's going to be, slanted. There's thing. There was actual. Can't believe we spend money on this in the United States, but there was a National Science Foundation, an NSF grant that was done to figure out how far a step could be off before people would trip while walking downstairs or walking up steps. And it turns out that it's only an eighth of an inch. If you're off by just an eighth of an inch and people walk up the steps, people actually trip over the step. And it doesn't, and my point in saying that is that it doesn't have to be off by very much. And it's certainly in trading is true too. We need to be very, very consistent. Now, you're consistent. I go and trade the exact same. Tiro, you can go and you can verify this with our listeners right now. But I trade the exact same amount every single time on every single trade, and it's been that way now for probably close to a year and a half, 2 years. Well, actually, a year and a half on the current level that I'm at. Prior to that, it was a lower level, but I was consistent for a very long time at that level as well. And the reason why is because I need to add consistency in there. I like my steps being even. And what that means, though, is that, if I'm going to trade the same amount, I'm willing to go and lose a certain amount of money, which means my pip difference is not being dictated by the charts. And some people say, oh boy, that's the problem. You always got to go and put your stop here on the other side of this. That's where you need to be getting out, because that's what smart traders do. That's what the smart money does. It's type of thing. Let's say if I was going long, back earlier in this hour, and I made the decision to go long at 1810. Okay. But I have to put my stop loss at the other side at the double O at the 1800, 1.18. Okay. And what that means, though, if I only got an account of this size, I'm only willing to risk this much. That means I need to go and set my lot size to X. That's that line of thinking. And there's nothing wrong with that line of thinking. That's fine. You can go and do that. It's not a problem. But it's a system, and you need to follow that system. And so I would say that changing your lot size, to go and base on that, that's fine. That's not an issue. What I am saying is, though, you can't just be changing your lot size just based on emotion. You got to go and have a reason for changing your lot size. On the other hand, I love having my lot size being exactly the same. And I'll go change where my exit points are. I'm not looking to go. I'm not a news trader. I'm not a swing trader. So for me, it's not as important, to go and say, hey, I'm below that protection of that quote unquote support level, or that quote unquote resistance level, whatever it may be. I'm not looking for those protection. I'm looking for price action movement, and I'm willing to go and take my trade and take my win or take my loss based on the price action. I'm not looking for protection of those lines. Other people, again, would say that I'm crazy for not doing that. Maybe, but I'm trading the way I trade.
Right, and you have to trade the way you trade unless it's not working. If it's working, then
exactly.
And I tell that to traders. In fact, there was a trader that said something about they were trying to decide which system, and I basically said, really doesn't matter. You gotta look in the mirror, and the problem's, staring right back at you. If you're having it, but if you say you're consistent or you say you're making money, then don't change a thing. I mean, it's like,
exactly
no,
right.
Just keep doing what you're doing and pay attention to see if it's not working or not working as well.
Right. I'll refer back to the very first conversation we had, which was via email. I sent you an email, and I showed you in that email what I was doing, and and the fact that I was making money on it. This is when I first started talking about the idea of the Walmal trade, and I had basically in that email asked you for advice of anything I should change on it. And you sent me, it was kind of funny, you sent me back a one line, I remember this to this day, a one sentence email. Don't change anything. It's working. Comment, it's working, ...
Mm-hmm.
It was sort of like, well, that was pretty curt. But, thinking back on it, shoot, that's true. It absolutely is true. If it's working, why are you changing things? Why are you moving things up and down and around? Now, if you have something that's not working, well, that's when you need to stop, look back and say, okay, what's working and what's not working, and then continue doing the things that are working and try to go and at least mitigate, if not stop, the things that aren't working.
Yeah, we just got a third dot going to the north.
Yes, we do. And I already told you, this is a holiday week, and I made my core for the day, and I'm not taking this trade just for that reason.
Right.
There would be talking about that trade. I probably would take this trade, but I'd only be looking for a pip or two, because look what we've been in. I mean, we've been in this really, really tight range, and we're going back into that upper range that happened earlier in this hour. So it's sort of like, I don't know if I like this that much or not. Try to take a pip, and but the thing is about this type of a trade is that if it does get in there and breaks it, we're going to 1825 or something. So it's worth the chance of taking it, but at the same time, know that you're going into a trouble zone.
Yeah, but on the way down, it actually that third dot was what was the big candle. It paid off, and if you stayed with it, you could have picked up even more pips all the way down to 1806.
Right, exactly. So that's the thing about trading. You gotta, you just gotta be consistent. Figure out what your rules, figure out what works, figure out what doesn't work. Try to stay away from the things that don't work. I know that's easier said than done. And then, based on that, write your rule set up, okay? And then just be consistent in everything you do. Be consistent on how you go and pick your lot size. Be consistent in where you put your stops. Be consistent in where your TPs are, and just be consistent. It's better to go and chip away and make a little bit of money here, a little bit of money there. And then when I say a little bit of money, I don't care if you're a swing trader or you're scalping, because a little bit of money with swing may be getting 20 pips or 30 pips on an 80 pip move. The thing is, it's better to get those 20 pips than try to get the 80 and wind up being in losses all the time.
Exactly. And the one thing is, it might sound funny, coming from me, who I don't know how many systems I have out there, 5, 7, when you count them all up. But they're all pretty much just based on horizontal line crosses. But it's one of those things where when I'm looking, I'm trading one system, but I'm aware of other parameters. Like right now, we're pretty much in the old rat zone. We're only 19 pips off the low. So, and I told you even before the call, I said, hey, guess what? That 1800 line's just above the rat zone. So,
right.
This is where I'm starting to look for price to start to turn around.
Right.
Then I'll look at things like the wick zone. It's like, where is, and all those different things. It's like, yeah, I might be doing, a flip-flop trade, but it's like, okay, plus I'm in the buy zone, or plus I'm in the wick zone, or plus I'm in the rat zone, or I'm in a couple of them. Maybe I'm above the pivot, and the pivot, near the pivot, I'm supposed to be long. All those types of things that I'm looking at, and it's going through my brain, but it's like, just stick with the one entry. But be aware of others, like what, it could be a holo trade, right now it could be near the lowest open, or a lower high trade. And see, right now we just put in a 3-ball, and all of the fib lines just changed. So it's like, okay, I got a 3-ball on the bottom. I'm going to probably start to look for a long coming out of the rat zone, but I might wait for that, the third dot. So anyway, fellow traders, we're just about out of time. So think about it. If you're changing your position size, then you're going to be changing how much you win on a pip move each and every time. So you might want to consider cutting down on the variable size of your trades, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.